Hey everyone, it's Nick with Us versus Her. Today, as you can see, I'm up $70 realized profit on NEO. Had a quick flip of a couple contracts that I swung overnight. Mostly came back, got some money back today on Baba. Baba was almost break even today. I was up quite a bit. Baba was up to 268. Actually was break even at this point, but as you can see, Baba intraday kind of just fell apart here. Let me put on the this chart's terrible. Let me just put up the 15-minute here. The 15-minute. So Baba did hit 268, 267 intraday, and then we had a flush at the end of the day, but kind of held on. So I still do think that Baba is looking like a pretty good trade, and I'm still 30 days out. But before we get into my trades and kind of what I'm looking forward to tomorrow and in the future and where the stock market is, let's talk about GameStop. Let's talk about AMC. Let's talk about what they're doing here. And for the people that don't know or just started trading options, this is what people like me have been warning about. It's not that GameStop crashed and got obliterated. It's that it's sucking the premium right out. So if you're buying calls or even puts, it is taking the premium, and the first thing is that I want to show you about GameStop. As you can see here, look, implied volatility off the chain here. This is a major decrease in implied volatility. Implied volatility decreased right here a lot over the last couple of days. And as you can see, if you don't know, you can add the implied volatility indicator in Thinkorswim, so that way you can track implied volatility, and that way you can kind of see it over the time frame. And this thing is cratering. Now the stock, it's not cratering, right? GameStop actually looks like kind of stable here and it's kind of holding on. If it can hang on to 80, 90, yeah, maybe it could push back up. Maybe it will. Maybe it won't. But where you're going to lose money here is on this implied volatility crush. I mean, they literally kind of last couple of days. I mean, if you look the last 2 days here, it's been sitting here. I mean, sure, it popped up to 160, came back down yesterday, but today there was little to no life. Now, it didn't go down, it didn't go up either, but this is where you have to be worried about implied volatility crush. This is where you're going to be losing money. And as you can see here, like for this week, I mean, puts were down. Even though the stock didn't move, puts were down 60%. Calls were down for this week 60%, 50%. If we go into like the monthlies, February was down 20%. The calls were down 12%, 18%. Going to March expiration, puts were down 20%, 15%. Calls did a little bit better. They were down like 5 to 10%. Okay, so across the board, every single expiration, it was down. So this is kind of what you have to be worried about. As you can see, April down 11%, 10%. That's what you have to be mindful of the implied volatility crush if you're trading options. Now, if you're buying the stock, this does not apply to you. If you're just trading the stock, implied volatility, theta, all that stuff does not apply to you. This is for options trading only. And then as you can see, kind of like the flow today, there was a 180,000 calls versus 331 puts bought today or traded today. And as you can see here, puts were almost double than what calls were. So does that mean the stock's going to go lower? No, but that's where people are starting to hedge their bets, as you can see here. So this is kind of interesting. Same thing. AMC actually fared a little bit better today. Their calls actually, there was 471,000 calls versus 322,000 puts traded today in terms of total volume. So more calls than puts were traded today, which is kind of bullish. But as you can see, they crushed premium in AMC too. This week down 60%, right? The calls down 40%. The monthlies, going to the monthlies, these are down 40%. Calls are down a little bit, some of that at the money, but the ones that are way out here, way out of the money, these are up, down 20%. But as you can see here, these in the money and at the money, and this is a lesson for you. Buying premium when the implied volatility is high. That's why I was shorting premium. That's why I kept shorting premium in there, because stuff like this was going to happen. They were sucking the premium right out of these contracts. And as you can see here, probably should have held on those contracts a little bit more. They nailed premium today in some of these contracts in the expiration that I was trading, but I just didn't know. I didn't know how far things were going to drop. But it looks like things with AMC, GameStop have stabilized. But with it stabilizing is going to cause you trouble with implied volatility. This thing is almost back to where it was before this major rip. implied volatility is getting crushed in AMC as well. So just be mindful of that. I'm not sure if it's going to go up or down, but I can tell you what the option pricing is doing, implied volatility is doing. They're taking the premium right out because things got super, super rich. Implied volatility was really high and still is high. AMC at 330%, but these were at 500, 1,000% implied volatility here on the weeklies and the monthlies, and now it's down to 300. So that's where you lose money. So the overall market today kind of was not very impressive. SPY, just kind of ping back and forth between a couple numbers, looking a little bit weak here, did bounce off the 50-day, but now we're getting stopped out here at, 384. Is it going to push higher? Let's see what happens. Qs is a little bit more worrisome. Qs looked like it was going to break right out today. Look at what the Qs did. Qs right out the gate, it gapped up, fell apart. Try to push back up, fell back apart. And what I'm looking here is this resistance here, 330, tagged it here, dropped. Tagging it again, dropped. We need to push above 330 on the Qs or the Nasdaq. So that's what I'm looking for right now. Couple plays that I did today. I took it very, very slow. I am playing PENN earnings tomorrow morning. So PENN, what I did is I shorted a naked put 85 strike for March. I collected just a couple $100. What did I get for this? Got 260 in premium. So if this gets crushed, 40-50%, I'll be happy. Not looking for a big gainer here. I wasn't sure if PENN, what the move was priced in at this point. It's been ripping. Last quarter when they reported earnings, they were 60, and now they're 109, almost double from last quarter. So I wasn't sure. I was thinking, okay, if this sells off, could come down to 90. It could bust right back up to 120, 130. So I just wasn't sure. So that's why I chose to sell premium in PENN for earnings. And then I also, the other trade that I did today was SNDL. Now I did two trades in here. I am shorting taking advantage of the movement here. I'm shorting 5 naked puts in the March 12th. Kind of small premium in there. I got 30 cents credit per option. So about max amount I can make is 160. If I get assigned shares on this, my average share, I'm shorting the one strike, my share comes out to like 70 cents. So I could live with that. And then I bought an additional, which these are kind of down a little bit. I bought these at the, when it was trading at 127, kind of got caught up in this and just was chopping around here. But what I'm looking to do with these 500 shares is if this thing really rips up SNDL, I'm looking to sell calls against it. So I'm shorting puts, and then I am selling, long 500 shares currently. If you kind of look at it, volume's starting to kick in, and this thing looks like it wants to revisit at least the 52-week high. Recently crossed over the 50-day, the 200-day, the 10-day, and is making a major push as weed sector, like, MJ making a ginormous push today. That's why SNDL is making a push, and then CGC, man, another push. MJ was up 9%. CGC was up 7%. Right now, weed stocks are hot. So I'm looking for more plays in weed. So, this SNDL is a small speculative trade for me. Implied volatility was really high. Again, these are at 400, 300, and that's why I am looking to actually, sell premium in here, and then I am long 500 shares, which is a small position for a little stock like this. I was looking to go 1,000 shares, but I'm like, if this thing drops, I'll add another 500. So let's just chill a little bit. And if you look into, let me just pull this up right now. The flow, the stats for today, SNDL. 19 million in call premium bought today, 2 million in put premium today. It was just crazy the amount of volume that was coming through in terms of dollars. The call premium came in to over 20 million, and then I don't know if, let's see here. Let's see if they have. Okay, yeah, call premium topped out at 21 million. Put premium is at 2.5 million. So, as you can see, they're loading in calls right now. And as you can see here, SNDL, you can also see how drastic it is. But I like to see how much money is actually being invested, which is why I pulled that up. So, it's going to be kind of interesting right now. Earnings has been a little bit lackluster. Amazon came down pretty hard, went actually red after pushing up to 34.50, just came nothing but down. Google actually did very well today. They're up 7%, $139, and it held ground for the most part. I mean, it sold off a healthy 40 points there, but it's hanging on. eBay is the big winner after hours today. eBay, we're looking for a trade in there tomorrow. Smashed earnings after hours, and they're pushing up to 64. Qualcomm, is doing horrible. Qualcomm is the expected move on this thing was $10, and this thing has moved 12. So, there's going to be some opportunity tomorrow outside of GameStop, outside of AMC. It seems like premium was rich, like in the wheat stocks. Opportunity everywhere. So don't get caught up. You can make a lot of money elsewhere in the market. So if you watch this video to the end, comment, watch to the end, and as always, stay safe, stay green. It's us versus herd.